Hello, everyone. Chelsea Williams here, founder of Core Solutions Group. I want to go over the information that I have for the payroll forgivable loans that the SBA is finalizing this week. I'm going to start by telling you a little bit about who I am, not to sell you. I'm not here for that. But what I do want to do is introduce myself so you know my background and why I'm the one presenting this information to you. So, like I said, I'm the founder of Core Solutions Group. We cater to law firms all across the United States in tax accounting and cash strategy. I've been featured on plenty of blogs and podcasts, was named 2020 Top 100 in Finance. And I say that not to brag, and I'm very proud of these achievements and accomplishments, but the truth of the matter is all of these are more or less byproducts of my underlying mission, which is financial literacy. It's something that we weren't taught in school, we weren't taught in college, law school, and so it is my personal passion to bring light to the financial situation of the people that we work with. And this coronavirus situation has been interesting because financial literacy plays a big role. Some people were prepared for it, some people were not. If anything, this has been a wake-up call for a lot of people to, work on getting their financial house in order. So being that I am in the financial industry, I'm sure to make strong relationships with other financial professionals like retirement planners, bankers. So what I'm going to be sharing with you today was shared with me from someone that I work with at a bank that I have a strong relationship with, who is in the SBA loan department. This is some preliminary information. I do want to disclose that I am not a banker. I am not a retirement planner. I simply gather this information because if you've watched any of my other videos, Core Solutions Group heavily believes in proactive financial management. We do tax accounting and cash management, but for the financial areas that we don't cover, we're sure to make strong relationships because we're really out to serve our clients and do what's best for them. And accounting is not the only piece of your business, and we recognize that. So we share information that we have to really help our clients. So this information came from the SBA loan director at the bank that I work most closely with. I want to go through it with you a little bit. And again, this is all preliminary information. None of this is set in stone. Please don't take my word as solid. This is simply the information that I was given and my interpretation, and quite frankly, questions that I have around it, which to my understanding, banks are meeting at the beginning of this coming week and will really nail down and make clear for us exactly what's going on around this. So this is an FAQ on the Small Business Interpretation Loans under the Coronavirus Aid, Relief, and Economic Security Act. Most of you know this as CARES Act. So first of all, what is this program? So it has not been passed yet, expected to pass soon. The federal government will be allocating $349 billion to the SBA to guarantee loans for small businesses. Who can apply? Any business with 500 or fewer employees. Now here's a key part. The business does not have to be shut down completely or partially. One of the questions that I've gotten around this statement here is, some businesses are not as heavily affected as others. Does that mean that they won't qualify? Are they going to be gathering any financial information? Especially in the legal arena, some of you are settlement-based practices. If you have some large settlements that just so happen to come in this time frame, is it going to count against you? So these are some of the questions that I have. Any business that applies is presumed to need the loan and will get it. This here might imply that, even if you're showing financial health right now and for settlement-based firms, maybe this really won't hit you until the coming 3 to 6 to 9 or more months, this is hope that you would still be eligible. The only underwriting standards are that the company was in business on February 15th, 2020 and had employees for whom it paid salaries and payroll taxes. The self-employed and independent contractors are also eligible for these loans. So I've had a few questions around sole proprietors because you guys are not on payroll, and this, is called the payroll loan. Will your guys' draws be covered under this loan? This statement here tells me that you might possibly be covered. I've also had a lot of questions around, law firms use contractors a lot. Are these going to cover their contractor expenses? From what we will go through here, it is not specifically indicative that that is the case. However, your contractors might be eligible for these loans. So if you aren't covering it on your end, the contractors may be covered on their end. These loans are non-recourse, meaning no personal guarantees or liens on practice assets. The government seems resigned to basically giving all of this money away for better or for worse. So, you know, this is in terms of liability and payback, they're being very generous with this loan. They're really trying to stimulate the economy, it seems. So in terms of the loan amount, the maximum loan you can receive will equal 2.5 times your average payroll costs during the 1 year period before the loan is taken. So if you are hiring staff now, that is not going to count towards this loan. They're looking at historical data. If you don't have your books in order, if you don't have current financials, please reach out to your CPA, your bookkeeper, your accountant, your staff member that takes care of the books, and get these documents updated. This is a first come, first serve, and you want to be ready to get ahead of the ball. Now, another interesting thing here, in the unlikely event you took a separate SBA loan disaster on or after January 31st, 2020, then your loan amount can be increased to include refinancing of this disaster loan. So some of you may have already applied and received the initial disaster loan. What they're saying here is that they are willing to look at it and possibly grant you the difference of what you would qualify for in this loan and bundle it with the disaster loan that you've already taken advantage of. Payroll costs are defined very broadly, so that's a question of mine. I want to get this more specific because this is a broad blanket on the payroll costs that this loan will cover. So some things that they are being descriptive about right now is that this loan can cover employee salaries, wages, commissions, etc., up to $100,000 per year, which equates to $8,333.33 per month. Payment for vacation, parental, family, medical, or sick leave is also said to be covered. Severance payments, group health insurance, retirement plan contributions. This is a big one. So some people may have cut back their retirement plan contributions temporarily as a precaution during these uncertain times. This loan is willing to cover those. And of course, all the payroll taxes that go with that. What this doesn't cover in terms of payroll costs, like it already stated, any compensation over $100,000 a year, federal tax withholdings, compensation for non-U.S. residents. It also will not cover sick leave and family leave provided by the New Families First Coronavirus Response Act, for which there are already tax credits. So how can you apply? The SBA is guaranteeing these loans, and businesses will need to apply through banks and credit unions. So right now, approximately 1,800 lenders are already approved to issue these types of loans. Start with the bank that you already work with. That's the easiest point of entry for you. If your bank does not offer these types of loans and you don't know of any around you, the bank that I am working with is currently seeing if they can service any business in any state. And if that is the case, please email me at Chelsea, CHELSEA, at YourCoreSolution, YourCoreSolution. And if they give me the green light that they can service businesses in any state, I would happily forward you their contact information. Since the maximum loan amount will equal 2.5 of your average monthly payroll costs during the 12-month period preceding the loan, you will need to submit an application that includes a sizable amount of documentation. So again, if you don't have your books in order, if you don't have your payroll reports, if you have a payroll provider, and you're looking to apply for this loan, start gathering that information now. So they're going to want to see employee wages for the last 12 months, including yourself. Your family and associate doctors, contact your payroll provider for the report. This report must also show paid time off, vacation, sick pay, family medical pay, etc. All of this is eligible to be included. So the more you can show, the better. Most payroll providers will give you a summary that breaks down the compensation type, so vacation, sick pay, it'll break it out. This is the report that they are looking for. They also want to see withholding for state and local taxes on employee compensation. Again, a detailed payroll report will provide that. 1099s paid to independent contractor doctors, documentation showing how much you, the employer, paid in employee group health insurance premiums for the past 12 months. Your insurance company should be able to provide this. A lot of you have online access to these. Your invoice should break this down for you. Also documentation on whatever retirement plans that you have in place. Again, the company that services your retirement plans should be able to get this for you. They acknowledge that this is going to take some time and effort. So again, start now, as soon as possible. Get those books in order, find these reports, reach out to the people that you're working with for these different items. Borrowers will also need to make a good faith certification that the uncertainty of the current environment makes the loan request necessary, that you intend to use these funds to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments, and that you have applied for another Section SA loan. So this again begs the question of if there's a business for whatever reason that is not on the books showing financial strain right now, but maybe it will pop up in the next few months, you know, we want to make sure that we're meeting the requirements here. So that's a question I'll be asking once they get more details, so that we can know exactly what they're referring to here. So, you know, you're going to need to show and prove, and we'll get to this a little later, what you use that money for. So again, maintain your books, maintain your documentation, your records. You have to prove this stuff in order to get forgiven. Note that you are not required to retain employees to get the loan. If you have laid off or furloughed your staff so they can get unemployment, you can still get this loan, but as it's going to explain, the amount of loan forgiveness will be reduced to the extent that staff is laid off or their pay is dramatically reduced. So keep that in mind. You know, be financially responsible. Make sure that you're not borrowing more than you can prove if you expect this to be forgiven. Another question I've had is, how much is it going to cost in loan fees? This says here there will be no fee to obtain the loan, which they are saying is another example of how this is really the feds are doing what they can to get this money circulating in the economy and take care of the people. Here's some good news. How long will it take to get the money? They are saying that they're going to try and get this money to applicants that are approved by the end of next week, which is very, very fast. If you've ever applied for any loan, this is a really good turnaround. Of course, pending any unforeseen delays. What can the loan proceeds be used for? These can be used for more overhead expenses than what went into calculating the amounts of the loan. So even if the loan is based off of your payroll costs and the other costs they mentioned above, they are still counting interest, not principal, payments on mortgages if you own property, also your rent and utilities, and also the interest, not principal, on any debts that were incurred before February 15th, 2020. So these are also qualifying uses of this money that can potentially be forgiven. How long can you defer repayment on this loan? Borrowers can completely defer repayment of principal and interest for at least 6 months, but not more than 1 year. The particular deferment period will be up to the discretion of the bank that issues the loan. So there's a lot of gray area here. This is also something that I will be asking for clarity around. What portion of the loan will be forgiven? The amount of loan forgiveness will equal the sum of the employer's payroll costs as broadly defined above. The interest they were referring to, again, not principal, on any debts that were incurred prior to February 15th, 2020, your rent expense, utilities including electricity, gas, water, transportation, telephone, and internet access. So again, keep record of all of the expenses that they're saying are qualifying here, because when you go to apply for forgiveness, they're absolutely going to want to see that. If you don't have a separate business bank account from your personal, Do that now. That is the best way to track these, which are incurred during the 8-week period that begins on the origination date of the loan. So you have 8 weeks to spend the money that they loan you and have it qualify for forgiveness. The amount forgiven cannot exceed the original principal amounts of the loan. I think that's expected. The loan forgiveness concept encourages employers to keep everyone employed. So the reason they're doing this is because they don't want you to lay people off. If you do lay people off, the amount of the loan forgiveness will be reduced proportionally by the reduction in full-time equivalent employees during the conversion period, which they're saying is February 15th, 2020 to June 30th, 2020, compared to February 15th to June 30th of 2019. So this is what they're comparing. Be very aware of what those amounts are and how they are going to differ. So if you employed 15 full-time employees in 2019 and 10 now, the forgiveness will be reduced by 1/3. If your employee and wage and salary has changed compared to last year during this period, again, be conscious of how much you're borrowing and don't get yourself in a financial hole. It'll be further reduced to the extent that the employees are being retained but are having to take pay cuts of more than 25%. So if you cut the pay of your employees, they're going to take that into consideration when determining how much you're eligible for in forgiveness. The CARES Act encourages employers to rehire workers and or restore the pay of employees who were kept but took big pay cuts. If by June 30th, 2020, you rehire the laid off employees and or restore the salaries of your employees who took cuts, then your loan forgiveness will not be reduced. Note that a large pay cut to a highly paid employee won't proportionally reduce your forgiveness. So if you are an owner or you have someone on staff that was making more than that $100,000 a year or $8,333.33 a month, and you take a pay cut, because of that cap, that will not count against you when it comes to how much you qualify for to be forgiven on. That will be fully covered by the loan forgiveness, and you will not have your loan forgiveness proportionally reduced. On the other hand, if someone earning less than $100,000 a year suffers a greater than 25% pay cut, say they have a 30% pay cut due to this cap, then your loan forgiveness will be reduced by that 5% excess amount. So what must be done to get the loan forgiveness? This is very important. You have to show evidence that it actually spent money on the things that are eligible for loan forgiveness by submitting an application to the bank that includes, again, documentation verifying the number of employees on payroll during that 8-week time frame of eligible loan forgiveness, including all of the payroll tax filings to the IRS as well as the state, unemployment, all payroll documentation. Item B, documentation including canceled checks, payment receipts, accounting reports, etc., verifying payments on business debts, rent, and utility payments. Again, this is the books. This is your accounting. If you're neglecting your accounting, which I know a lot of you are, please get it together now. I talk to so many attorneys and business owners alike who feel like they are a financial mess and they're ashamed to step forward and get help. We see it all the time. We don't judge, we do our job. Our job is to help you get financial clarity and get your books in order. So just take that step and get it done. A certification from an officer or owner of the borrower that the information is being submitted is true and that the amount of which forgiveness is being requested was used to retain employees, make interest payments on business debts, lease payments, and utilities. So again, you're going to have to tell them that, you know, you're telling the truth. You're not just trying to get free money. You really need it. They want that certification letter from you. So usually the tax treatment on forgiven debt, you're taxed on it. In this case, they are not going to be taxing you on the amount of forgiven debt. What happens to the portion of the loan that is not forgiven? So the remaining balance will continue to be guaranteed by the SBA, have a maximum maturity of 10 years, and bear interest at the rate of 4% or less. This is not a terrible interest rate if it turns out that you're not eligible for complete forgiveness. So, you know, keep that in mind. There are no prepayment penalties on the loan, so if you pay it off early, you're not going to be penalized. Now, they did include this section, which I can really appreciate. Is it preferable to lay off or furlough staff and send them to unemployment, or keep them on payroll and get this loan? So they line out two approaches here. Approach number one, if you have not already let your staff go and think that doing so will be difficult in terms of employee morale, then consider taking this loan at the beginning of the loan application process as early as next week. The benefit of this loan is a tax-free gift via loan forgiveness to pay 8 weeks worth of your payroll costs, rent, interest on your debt service, and utility bills. So, you know, I've watched a lot of webinars, a lot of high-performing, successful business owners talk about this. And when it comes to laying staff off, you probably have key people that you don't want to lay off, but maybe it's going to be a struggle affording them. Keep in mind that your team is your strength. Nothing great was ever built alone. And if you have key team members that you value and you don't want them to think that, you know, something like this happens and they let you go and so they go somewhere else and you've lost that loyalty, you know, this is your opportunity to keep them, because this too shall pass. This has happened in history. Crises are actually quite common. I have another YouTube video that I did last week. I watched John Maxwell's Facebook Live on leadership through crisis. I'll attach that video at the end of this one. You know, your team is important. So if you have a team that you are worried that you can't afford them through this crisis, this is a really good option for you. Approach number two. The best way to handle this for most practices, is, in their opinion, will be a two-part approach that takes advantage of the unemployment benefits and the loans. So this is a more disruptive to the practice as it requires furloughing or laying off employees. However, if you've already done this, you know, then this is kind of the option you've already chosen to take. If your practice is shut down or largely shut down, then furlough staff and have them apply for unemployment. Thanks to the CARES Act, they will get traditional unemployment benefits plus a $600 kicker. This, they're hoping will replace all or most of their normal pay, and in some cases give them a raise. So their thought line here is that if you're putting people on unemployment, they're trying to make it to where they're earning just as much, so that you have a better chance of rehiring them when this is all said and done. When you're ready to reopen your practice, rehire your staff then and obtain the loan at that time. Just do this by the June 30th deadline, better yet a couple weeks before then, in order to give yourself a cushion. You will use the loan proceeds to pay your overhead when the practice reopens. You should get the benefit of loan forgiveness for the 8 weeks following the date you take your loan. So in July, that would be August. And so long as the employees are rehired by June 30th, the loan forgiveness will not be reduced. In this way, you are taking advantage of unemployment insurance to cover your employees' wages during the shutdown period and also getting the tax benefits of the loan. So I can appreciate their transparency here and letting you know that you can take advantage of both if that's a good fit for you. So again, this is the information that I have so far. More details will be coming out early next week or this coming week. If you have any questions that I did not answer during this presentation, please, please, please comment or email me. Again, that's chelsea@yourcoresolution.com. I would be happy to pose these questions to the loan officer that I'm working with. Check out our other YouTube video. You know, I really believe that in a time of crisis is where great leaders stand up and shine. And I think that the people that are going to make it on the other end of this are the businesses that have strong leadership. So I hope this helps. Reach out to us with any questions, and we will be bringing details out as soon as we have more. Take care.